Okay, it's time for today's tax talk, or tax talk today, or talk tax today. All the T3. That's why I call it T3. So today we're going to talk about how to avoid crypto tax mistakes. It's big. We've been talking a lot about cryptocurrency, and it gets some. So there's a good article today that I want. Here we go. So here we are. I wanted to. I'm gonna have to change that beginning. It's a little long, but we're gonna. And I'm gonna ask. Used to be called. We used to call this call to action. Now I always say that there's call to action. Every show there's a call to action. Okay, so if you're listening, subscribe, like the page, share the page. It's going to be very helpful for me to get it out there so people can see it. Okay, so that's important to me, and I'm asking you for your help. So today we're going to talk about how to avoid cryptocurrency mistakes. This is going to be kind of a top 10 list, kind of like a David Letterman top 10 list, because there's a very good article in Forbes magazine today about this, and so that's why we're going to talk about it. But obviously, again, we've been talking a lot about cryptocurrency anyway. This is kind of where we've been. It's been one of the major tax issues of the year, maybe for the last 2 years, especially with the crypto crashing and people having a lot of tax implications. We're going to talk a little bit about also what the IRS is doing about with the tax with the cryptocurrency and on the tax bill. So first, let's talk about. There's this great article today. It's in Forbes, and it's called "Thinking of Getting into Cryptocurrency: The Top 10 Crypto Tax Mistakes." Now, I've had a lot of clients who have this crypto stuff, so I went through this list, and that's why I'm going to use it, because it's very. I have also had these issues pop up, and so that's why. I thought it was a good article. So the first one, like any David Letterman, we start from the worst, from the least to the most, right? So 10, the 10 is that's 10. 10, improperly reporting cryptocurrency received from airdrops, forks, and splits. Now, people who are new to cryptocurrency may not know what all this is. So let's talk a little bit about that. So a split, here's a chain split, they call it. And a chain split is another word for a hard fork. So let's find out what a hard fork is. And a hard fork, as defined by the cryptocurrency dictionary, is a hard fork is a major change to the blockchain protocol. So like cryptocurrency is a blockchain, one after another. And when they split off, this causes a fork. And this is what's caused it. The Bitcoin Cash is now a different currency than Bitcoin. And this is where it came up with. It came with a fork. And so you should know this, because it's kind of like a split in a stock. But remember, cryptocurrency is not a stock. And so it's treated differently. It's treated as property. And so I wanted to just go through that. What a split is. Let's talk about an airdrop. And what is an airdrop? And an airdrop, where is it? An airdrop is when you might receive an airdrop for maybe for subscribing to something. They'll drop it to you. Or sometimes in a fork, they'll drop currency to people on a list, and that is what an airdrop is. So let me see if we go up here to the top, I'm sure under A it's there, airdrop. Airdrop. Someone should airdrop some. I thought I had it already in the queue. but obviously I did not. So elemental P, HI. An airdrop is a way to distribute coins. End users can generally get coins for free or in exchange for a small task, such as subscribing to a newsletter, sending a tweet, or inviting other people via a personal affiliate link. The opportunities and dangers of an airdrop are described in detail in an article, What is an Airdrop? We're going to talk about that too. There's that article there, but we're going to talk about what an airdrop is and also the ramifications of these, the tax ramifications of these. But you have to understand that there is going to be tax ramifications. And I think that's the first thing I want to get through to people, is that whenever you're going to come in possession to any cryptocurrency, there's probably going to be tax consequences. And so whether someone gives it to you or whether you get it or earn it or however you buy it, there's going to be some tax consequences of that. So that's the first thing you need to know. Failing to report crypto to crypto transactions. So I buy Bitcoin and it's in my wallet and I use it to buy another cryptocurrency exchange. Well, that's an exchange. That's a taxable event. Whatever. If I bought the Bitcoin, let's use something else because Bitcoin's too high at 36,000, 38,000. Might be higher today. I'm not sure what it is. I didn't look today. But let's say there's a cryptocurrency at $10. And I buy that for $10 and it goes up to $20. And now I use that $20 to buy $20 worth of another cryptocurrency. Well, that's a taxable event. There's a capital gain of $10. I bought it for 10. I used it to buy $20 worth of something else. It's gone up in value $20. There's a tax consequence for that. And number 8, using the wrong form to report cryptocurrencies transactions. And this has to do with the IRS, right? Now, the IRS has a form for everything. And a lot of people don't understand and they use the wrong form. So depending on whether it's income or whether it's a capital gain or some other transaction is the form you have to use. So if you use the wrong form, the IRS is going to audit you and they're going to bring you up before them. That's why it's good if you're going to be doing your own tax return, understand it. But if you're going to hire someone, not all these tax preparers understand cryptocurrency. Okay, so my office does. You can hire us or not. I'm not trying to sell you anything. What I want you to know is that get someone that's competent, that understands this stuff and doesn't use the wrong form. I've seen tax preparers use the wrong forms, okay, and that causes nothing but heartache. And so don't do it, okay? Next, improperly reporting cryptocurrency received as earned income. Okay, so you're working. Someone wants to give you cryptocurrency instead of cash. That's income. It's taxed differently than if I bought it and sold it. Buying and selling it is a capital gain. Getting it for services that I provided or working that I've done, it's income. It's taxed differently than if I had bought it and sold it. Number 6, failing to report cryptocurrency exchange for goods and services. Kind of the other side of the coin, right? So if I get coin, if I'm working and someone gives me coin, that's income. If I use it to pay somebody instead of cash, now it's a transaction. I'm selling it I'm selling it. I'm going to get value for it. So whatever that value is that I'm using, that's what it's worth. And at the time that I exchange it. So we know what it's worth at the time I exchange it. Someone works for me today or I buy something today. Remember we talked, Musk is talking about accepting it to buy the vehicles. If you do that, the day that you sell it, the day you purchase that vehicle, that's whatever the value is of that crypto at that time. That's how you're going to determine whether it's a loss or a gain. Number 5, failure to prepare and maintain adequate or any records reflecting crypto trade. This is big. This is huge. So I remember a couple of years ago when I saw my first crypto case, the IRS had come after my client for hundreds of thousands of dollars because he was buying and selling crypto, but the exchange only reported his purchases or his sales. So whatever he owned, they didn't know what he paid for it. So this happens a lot when if you're buying or selling a home and then you don't file your tax return. The IRS will get notice that you sold your home, and let's say you sold it for $250,000. They don't know what you bought it for. So if they do the tax return for you, called a substitute for return, they'll just say, hey, the full amount that you got, that was income, and then they'll tax you as the full amount. Same thing here with cryptocurrency. And I've seen it happen with stocks also. They don't know what the basis is. They only know what you sold it for. And so if you don't report what you bought it for the basis, right? That's the basis. Whatever I buy it for, that's the basis. If they don't know it, they're going to say that you bought it at zero and that whatever you sold it for, that was all a gain. And so they're going to tax you on that full amount of gain. Number 3, using like-kind exchanges to report crypto. In all fairness, this is a 1031 exchange. Generally, 1031 exchange is for real estate. So I don't know why this is mentioned here. Although, except for that, crypto is property, and so they may have been. But I'm fairly certain that 1031 exchanges are dealing strictly with real estate, and crypto is not real estate. So I don't know why that's listed there. Number 2, failure to take proper steps to pass your cryptocurrency in the event of your death or disability. Now, this is very important also, right? Unlike some other exchanges, if I have a Schwab account or some other account where I name a beneficiary, so if something happens to me, they know who's going to get it. A lot of these wallets are if they're gone and no one can get in them and no one has the passwords, that money's gone. You can't ever get it. So, make sure that if you're going to keep a wallet, keep the numbers somewhere where people can find them. Something happens to you, you have a large amount of money in these wallets, it'll just disappear. It's gone because no one can go after it, can figure out who has it. Okay, that's the beauty and the curse of crypto. Okay, so that's a problem. So again, make sure you have it written down and that there's that somebody can find it if something happens to you. Don't put a lot of money in in these wallets and then you're the only one that knows how to get into them. Okay, a lot like a password in your computer, right? Something happens to you. How is anybody going to get any information? Okay, so that's important that you write it down and put it somewhere that people can. And the number 1, I wish I had a drum roll. I should have had a drum. I could have had a drum roll. But the number 1 is failure to report cryptocurrency at all. And this is, again, a lot of people don't even understand that you have to report cryptocurrency. I pointed this out before, but I wanted to do it again. This is the 1040 form this year, and it's right here on the first line after you have your name, your address, right there, foreign country. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? So this is right there on your tax return. The IRS is really taking steps now to go after people with cryptocurrency, and it's not a good thing, right? They think that. My own opinion is I think that they're using it a lot for propaganda in order to, it's not fair. We need to come up with all these new rules. But most of these new rules are not going to go to crypto. They're going to go against you, whether you're in crypto or not. And we talked about this yesterday about the IRS asking for financial institutions to share all your financial information with them. And this is in the guise of going after the billionaires and millionaires, but they're not going to catch them. They're only going to catch you, and so that's what they're looking to do, right? They want to catch you. They're going to use it as reason because they need public support in order to get this stuff to get it approved in Congress. But in the end, that's really just going to be it's going to go after you. So again, don't get fooled by it. Don't get So I wouldn't support any. I don't support the IRS being able to go into anybody's financial accounts and determine what you have put in there and what you've taken out of there. That's none of their business, in my opinion. And we should be very vigilant in protecting our privacy, especially from the IRS. We already saw yesterday that we talked about this, that all of these millionaires and billionaires, and I think there was more than 10, I think there was 30 people that they released all of this tax information. If they can't keep their tax information private, they're certainly not going to be able to keep your tax information private. So I would say to you, let's oppose that. Let's stand in the way of them doing that. Let's not let them do that. because the IRS is brutal, and they have enough information. If they want to get information from you, they can get it anytime they want. They can subpoena it, and they often do subpoena it. And if they subpoena it, then they can get it without your permission. And so they don't need the banks to just, hand it over to them. Again, this guy goes to you're guilty until proven innocent, and that's not the way it's supposed to be in our country. And let's not let that happen. So anyway, this was the how to avoid crypto tax mistakes. Thanks so much for joining me, and we'll talk soon. This is the wrong one. Wow.